Alright, welcome back. This is why I do not trade CPIs. The predictions never come out. Okay, so right now we have this daily fair value gap right here, right? Preferably I want to see it open. If not, just a dip through, nothing much. Okay, just a snap through it and then back up. That's what I'm anticipating. On the XY, as you can see, right here on the daily chart is breaking below this fair value gap right here, which previously it used it as support. So right now, running through it, I expect to see this as resistance, taking out this swing low down here. Similarly, I do not want it to trade longer below this swing low, preferably within this fair value gap. It should bounce. Let me just draw it out in time. Where is the rectangle? Okay, right here. Right, it could reach into this fair value gap, but preferably it stays open because we do have a gap right here. Right, at most come into this small little tiny opening gap, as you can see right here, and then break down. Okay, prefer to see this open. And on the weekly chart, it's even clearer. This is the the daily fair value gap that I've drawn, I think, right? If you narrow it down, the weekly fair value gap is right here, and it's within this shaded area, this big shaded area. This big shaded area is the monthly breaker, right? I could use this as well for the breaker. If I use this, then you could set the stage to run into this fair value gap right here. Okay, so as you can see, the price punched through this fair value gap, so one candle through it. Now I want to see some sort of sensitivity over here for bearish continuation down. Okay, you could use this as balanced price range on the weekly. This fair value gap right here. Yeah, I'll be using this as the balanced price range. Okay, the candle created this gap, this candle here, one candle going past through it, and then another candle going past through it, just one candle. Okay, so maximum, I think right here, the strongest area of resistance if it was to come back up. Okay, that is what I'm anticipating for dollar, right? If it reaches into that swing low, that right there will be the monthly fair value gap right here with confluence of this breaker. Okay, I want to see some reaction inside here to bring it higher. We do have a huge inefficiency above here and this gap as well, and furthermore I'm personally looking at this equal highs up here. Okay, it seems to be the target. So yeah, that's for dollar. For ES, likewise, this should be an area that it should hold. Okay, for support, I think we can use this gap right here. Right where the fair value gap is. Okay, this thing should hold. As you can see, it's used before. Okay, so I'll just put this out here, shade it in blue, and just on the daily. Yep, right here. It could come back down here, take out yesterday's low, and then resume back higher. I think we should do that due to this area being premium. Okay, swing high to swing low, 50% right here. We are right in premium. Okay, above premium we have these levels here, the weekly volume imbalance and the relative equal highs, which is the end of the range. Right, we have lots of balance price range here, so it's gonna be a slight grind up. It's not gonna be, I don't think it's gonna be an easy grind up, and if it fails to make this swing high, and Dow Jones for example takes out this swing high and the relative equal highs here and here, then I think it sets a stage for an SMT divergence breaking down, right? Because we have accumulated a lot of orders down here. This is where all the money is, okay? And we are in the first quarter of the year. Usually by close to the end of the quarter there should be a move down. Okay, I'm always looking for the first quarter to have a bearish SMT divergence, and then we short it all the way down to summer, to the end of Q2. Okay, that's the whole plan for equities. Right, on a 15 minutes, let's take a look. Right, yesterday's CPI was quite a lackluster event. Nothing really much happened after that. Usually for CPI, if you want, you can take a look at the past datas. The past CPI datas, they are all a one-sided move. Okay, a strong one-sided move. For today, what we got was, it doesn't look like CPI right here. Okay. So yeah, this is why I don't trade it. Even if I can predict certain levels, right, I don't trade it. Right, as you can see, I predicted it to come down into this area where we have the 1 hour fair value gap. It did not. However, it did trade up to this area and reject, as you can see right here on 8:15 and 8:30. Went up there, touched the daily order block, and then went back down again. Same thing here, take out the highs into the daily order block yet again, and then we swing it lower. So this level is a strong level here, which is why I said that it's going to reject off this area. Okay, so right now we are trading slightly above premium. Okay, equilibrium is right here. I want it to reach into discount, or maybe even take out this low as I've mentioned, because there's a fair value gap down there, and this low is supported by this balance price range on the 1 hour. Okay, so if we can do that, it might set the stage up into taking out this relative equal highs. Of course, it doesn't need to. Okay, alright, I'm going to take a phone call and I forgot where I stopped. So yeah, I think this relative equal highs are to be taken, so I will look for a move into this highs on Friday's New York session. Okay, right here there's a news driver at 10, so I'll wait to see what happened down there. Okay, preferably I get a setup within this area and then complete it by lunch. That would be the best case scenario. So yep, there you go.